Welcome back to Not Financial Advice, a value investing channel where you're able to see 100% of my portfolio, not only on the green days, but on the red days as well. And if there's a stock that you'd like for me to review, as always, feel free to drop its ticker symbol in the comment below. I'd be more than happy to make a video for you on it. So today we're going to be talking about Ferrari and its stock ticker symbol race. They're trading at $350 a share, but we want to get an idea of what Ferrari is worth per share. And we're going to jump into that right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
A quick little update on my portfolio. Today, the market is up 0.55%. And my portfolio is lagging the market up 0.22%, which is good for a cool $150 in gains. Small caps are down 0.2%. The NASDAQ composite tech heavy stocks are rallying up 0.8%, and the Dow Jones is up 0.4% as well. And so the only notable piece of market news I'm aware of is yesterday afternoon, there was a false tweet from hackers on the SEC's X page saying that they had approved Bitcoin spot ETFs. The market's waiting for that news right now. It's anticipated sometime this week, maybe today or tomorrow. But looking at my diversified portfolio, we're going to take a look at the top 5 gainers as well as the top bottom 5 laggards within my portfolio to see if we can get a handle on what's moving the market today. So first and foremost, I have Meta shares up 4.2%. Large cap growth name. I also have Boston Beer Company. So this one is a small cap value defensive brewer of beer. They're up 3% on no news as best I'm able to tell. But then we also have Home Depot up 2.5%. They got some good press here in the financial news, extolling the benefits of their dividend growth. Just the other day, large cap tech, Microsoft is up 2%. And then a small cap value defensive stock, Seneca Foods, is up 2% as well. So looking at the bottom 5 decliners, we have cannabis stocks, Trulieve and Curaleaf, down about 4%. Large cap value stocks, Walgreens and Estee Lauder, down about 2.5%. And then a large cap defensive food name, Kraft Heinz, also down about 2.05%. So not really a rhyme or a reason behind how the market's moving today. Again, the market up 0.55%. Today is Wednesday, January 10th, 2023. We're just here a little bit past halfway in the trading day, and the market is currently sitting up 0.55%. So let's jump right into it. I'll ask you to like the video and subscribe to the channel. But looking at Ferrari, we can see that its shares are trading for $350 a piece. And this is what would be described as a power stock, one that for all intents and purposes moves up and to the right without a lot of deviation. We can see that this stock is up 519% since, say, 2016. So I'm going to do the math on that. 2024 minus 2016, something like 8 years. So 520 divided by 8. This stock has approximately gained 65% a year for the last 8 years, which is nuts. And so certainly a power stock. Trading at $350. So there were some interest rates that got risen in 2018, and people were worried about a recession in that year. We saw that Ferrari stock went down 34% at that time. So that's of note, and we're going to come back to that. We can also look at the bull market, which started in late 2021, going into late 2022 or mid 2022. We can see a max drawdown on the stock of all times at 35%. And so that type of drawdown is something that's going to be really important when looking at a company such as this. So let's get over to Morningstar. So Morningstar does in fact crown Ferrari as a wide moat stock. And so they go on to say that Ferrari has long-term sustainability of revenue, growing addressable market growth, expansive profit margin, and solid returns on capital through different economic cycles. And it shows to be a compelling reason to invest, but at the right price. Because of its exclusive clientele of high net worth individuals, we believe the company will show resiliency during periods of economic uncertainty, such as the case during the 2020 coronavirus pandemic. Well, we are not entirely adverse to paying up for a stock that possesses a wide moat, That brings us right over into it here on Qualtrum. So I'll ask you to like the video and subscribe to the channel. But Qualtrum, it's software I pay for to look at stocks, not a company I'm affiliated with. So I'll leave a link for Qualtrum in the description below. But what we can see here is that forward PE of 40. So this is by all means an expensive stock, um, very likely overvalued. But we're going to make that determination together. We're going to get an idea here of what this company is worth. So it's a large cap company, headquartered out of Italy, by the way. All these numbers are in euros. I've diligently converted them for my mostly American audience here, but it's a 62 billion market cap company, a large cap company. They have a small free cash flow yield of 1.2%. So people are willing to pay huge multiples on their cash flow. It's seen as being very coveted. They have um, a small dividend at a very safe rate that'll grow over time. So dividend growth could definitely be part of this story. But let's take a look at Ferrari stock, ticker symbol RACE here on Qualtrum, and check out the different metrics that are going to be moving this stock. So what we can see here is the stock is up 8.1% a year over the last over the last 7, 8, 9 years. So the revenue growth looks really great. Not too much of a dip in 2020, but also looking at the 5-year chart, its growth is accelerating a little bit to 8.3%, further accelerating to 9.2% over the last 2 years. So we're going to use these numbers when we do our rough DCF estimate on the stock. But as far as revenue growth, this looks really good for me. It would, in fact, be a check mark. Let's take a look at free cash flow together here. So let's see if they're diluting shareholders with stock-based comp. They issue no stock-based comp. That's actually pretty remarkable. So the sign of an investor-friendly company. And looking at the growth of their free cash flow, it is a little bit cyclical, like an engine, but it's up and to the right. And so free cash flow growth of 12.6% earns a check mark from me. Earnings per share are another thing that can definitely move a stock, especially on Wall Street. And their earnings per share are up 14.8% over the last 10 years. Yet another check mark. Looking at cash and debt, their debt is sort of stabilizing here, and their cash is as well. And it looks pretty reasonable. So this would be a check mark. Taking a look at dividends, there's tremendous growth, 18% growth in their dividend, which is safe. So this is a strong check mark. Dividends on this stock look fantastic. I like to see that they're buying back shares, although conservatively, which probably makes sense because the shares are quite expensive, but they are decreasing their share count. So that is yet another check mark. What could possibly be wrong with this company? Maybe it's just valuation. So, looking at ratios, starting with returns on capital employed, a median number for this stock seems to be about 18%. And so that's pretty dang high. We're going to give this another check mark, and we're also going to look at their profit margin. They have a bottom line profit margin with a median of around 18%, with gross margins in the 50% range, which is huge, especially for a car company. So a check mark on margins and profitability. Taking a look at their relative PE valuation across all time, it's kind of in that middle range. So this is just going to be kind of a pass from me, neither good nor bad. Taking a look at expenses, they're going up into the right, which is bad. And in the most recent year we have full data for, it looks like about $2 billion in expenses, including general and administrative, as well as sales and marketing going up. And, because they have revenue of around $5 million a year, but they had expenses of $2 billion in that most recent year. That's not as great, but because of their high returns on capital employed, I will be giving their expenses a sort of a pass grade as far as that goes. So overall, the company is looking really, really strong. Okay, over here we have our handy dandy DCF calculator. And what I've done is I've averaged the free cash flow over the last 5 years from Qualtrim. And then I double check the data on Yahoo Finance and I use Google to convert from euros into US dollars. And so we can see on average over the last 5 years, they've got an average of about $475 million a year in free cash flow. They have $1.5 billion of cash on hand and $3 billion of debt. They have this many number of shares outstanding, and you saw the growth rates, the historical growth rate around 8.3%. Being a wide moat company, I've kept the projected growth rate over the next 10 years at 8% steadily. And then I've given it a terminal multiple of 5%. Now, I ran this before, and apparently the stock was almost worth nothing. That didn't seem right. And so, what we know is that the free cash flows of this company are highly coveted for all of the reasons we've discussed in this video. And so they do pay a small dividend yield, but I've put the discount rate at 7.5%, which is kind of the historical average for stocks to see what sort of value we could come up with. $350 is the price of Ferrari shares, ticker symbol race. The value that I arrived at was only 132. And so I really had to take a step back and look at all these numbers. And then I went ahead and decided that, you know, how can the market be so bullish, so exuberant on this to where my calculations are showing, 65% over valuation. So I went ahead and I went over to two sort of free online cash flow calculators. Their estimate for the intrinsic value is $120. And then looking on Guru Focus, I went ahead and customized these numbers here, but they had an intrinsic value of $135. And so looking at $135 plus $120 plus my estimate, which was $132, gives us an average of $129. And so that brings us back to the first thing that I shared with you folks. Looking at this chart, with a free cash flow valuation of approximately $130, this is a stock to keep on the watch list and wait for an environment where there is um, a a bear market. That would probably be the only time you could pick up shares and expect a really strong return. We can see here at the bottom of the 2022 bear market, the shares went as low as $181. Um, so that's sort of what we came up with. I hope that you found this video to be informative. And if you did, make sure that you like the video and subscribe on your way out. And I will see you on the next one.